Hi and welcome to this webcast. I'm Michael Yardney from Metropole Property Strategists, and with me today I've got Brett Warren, Senior Property Strategist for Metropole in Brisbane. Welcome, Brett.
Hi Michael, good to be with you again.
Now, over the last months we've been noticing a significant change in the sentiment in Brisbane and the market improving, and while we've had a few chats about it, a couple of weeks ago we got together with Dr. Andrew Wilson, Australia's leading independent property economist, and he gave some of the research he's come up with for his company, My Housing Market. And I know you said to me, hey, this would be really good to get the message out to our general community. So let's have a bit of a talk about what's happening in the Brisbane property market and what insights you got from Dr. Andrew Wilson. What's happening on the ground, Brett?
Yeah, thanks, Michael. It was actually an interesting session we had with Dr. Andrew Wilson. He is actually confirming a lot of what we kind of thought. It was good to get it from another authority figure to understand what's happening in the market. And Dr. Andrew Wilson obviously led with there's brighter times ahead for Brisbane. So I really think it's almost a line in the sand, and we know things are kind of turning around. But really, looking at the past, Brisbane has performed reasonably good considering the headwinds we had. And now those kind of market factors and local market factors are starting to turn around.
Well, that's interesting because there really were a lot of headwinds over the last decade, and I think it showed the resilience of the Brisbane market because despite the global financial crisis, the mining boom, a number of floods, rising interest rates, the collapse in migration to Brisbane, rising interest rates, cyclones, you've performed consistently, haven't you?
Absolutely. Yeah, it's quite funny. You know, you remember the big ones like the floods and the downturns and things like that, but there's also a lot of little cyclones to the north of our state, and also the mining downturn led to a bit of an exodus, people not coming into Brisbane anymore for jobs and things like that and opportunities, and our population wasn't improving. And also, the jobs growth was just disappearing as well. So considering a lot of those factors have been going down, to actually perform reasonably comfortably good is a good result in the end.
Now, of course, that's the general market, and I was really impressed when we did some research and looked at how some of the properties we'd purchased for our individual clients had done, because averages mean some have outperformed and some have underperformed. I guess that's how you get an average. And buying the right property in the right location and then adding value has still reaped pretty good rewards in Brisbane.
Absolutely, Michael. Look, some of those areas that we're performing 3 or 4 times in the last 4 to 5 years better than the Brisbane average. So you've just got to understand where to look and what those key drivers are, and take advantage of those opportunities.
Well, Andrew Wilson mentioned a number of factors that would suggest there are brighter times ahead for the Brisbane market. Do you want to quickly run through those, Brett?
Yeah, absolutely. Look, he obviously mentioned the importance of having that population turning around, that immigration. So people are actually returning to Brisbane. The last 2 or 3 years from interstate and more importantly overseas. I think from 2015, Brisbane led the nation in terms of people coming to Brisbane. That's really exciting. We're also seeing a number of jobs being created, and more jobs being created throughout Queensland, and more in particular in Brisbane. I also found interesting, one of his comments was the interest in Brisbane from China and areas like that. And as you know, Michael, we've been doing a lot of research about the second airport runway. There's actually been about 4 or 5 big Chinese airlines that are signing up to that runway. So that was interesting to hear his point of view and really understand that those Chinese people are going to drive population, they're going to drive tourism and immigration for our education and things like that.
Well, yes, in the short term, they're going to drive tourism, and that's really good for the economy. But when they go there and see how nice it is, a lot of them are going to choose Brisbane as a place for their children. A lot of Chinese investors, foreign investors, Indian investors are really looking at it with a very different perspective to the local investors. They've got long-term outlooks. They're buying to put their money into a safe, stable economic environment, a safe political environment. And they're not looking as much for the capital growth or the rental returns. They're just looking for a safe haven, aren't they?
Absolutely. And then, look, Brisbane hasn't provided that in the past, as we've seen from the last decade. But look, the next decade's looking a lot more exciting, and there's a lot more opportunities on the horizon.
But there was a bit of a problem with the building boom, and to be fair, a lot of people moved from the mining industry into the construction industry, and you built a few too many high-rise buildings. So it's been a very fragmented market in the last couple of years, Brett.
Yeah, particularly in the unit and apartment market, Michael. But look, I think that's actually a product of not having the population and the migration to actually take up some of those apartments. Sydney and Melbourne had minor issues like that, but because they had a growing population, I guess they didn't come to the surface as much as they did in Brisbane.
The good news is that the building boom is ending. There's very few new approvals in the pipeline. So as the current oversupply, and there's no hiding it, there is an oversupply of inner city and Fortitude Valley and close to the city apartments, as they get taken up, there's quite a long lag time. Developers are not brave enough to get going with many new projects just yet. So when they eventually will, it'll be when there's a huge undersupply of properties, and with a long lag time for these new projects, there's a number of good years ahead for apartments, but not just yet. Houses are performing better than apartments.
Yeah, there's a clear gap there. Like you said, luckily our approvals are down 50%, so they've kind of come back a fair way. And again, our population is starting to grow again, so that'll slowly be taken up. But as you said, on the other side of the coin, look, houses are performing very strongly. There's not an oversupply of houses. There's actually a shortage in some of the better areas, and that's why we're seeing the above average capital growth in those high demand pockets of Brisbane.
Well, let's have a look at a couple of the graphs that Andrew Wilson provided at the seminar. And you'll see here that the Brisbane home building, which was a key economic driver to the boom, has now started to slow down. That's a point we already made, that there were peak building approvals post-mining boom in 2015, but as you say, they've reduced considerably.
Yeah, down by 50%, which is, they'll probably continue to come down a little bit from there and get back to some normality as it was before that boom.
And with that large supply and relatively cheap accommodation, because the accommodation is much cheaper than in the other two big capital cities, Brisbane's offering affordability and lifestyle at the same time. And it's really the jobs, though. It's the jobs that are driving people, because just because it's cheap, and I know your weather's much better than where I'm sitting in Melbourne at the moment, that hasn't been enough to drive people there. They need the security of jobs for their future. What's creating these jobs at the moment?
Yeah, look, it's our key employment hubs, Michael. So obviously the necessary evil was the construction and the apartments oversupply and things like that. But that actually provided a bit of a boost for our economy, even though we're a bit oversupplied. But that'll evolve in the next 12 months. And then we get on to projects like the Queen's Wharf project, which is 12 football fields of development in our CBD, a big economic hub in itself. We've already talked about the airport runway, the second airport runway, which will create a huge amount of jobs and investment and tourism to Brisbane, which may have not happened beforehand. And also our hospitals. So it's always those key drivers of growth that provide that security, those job opportunities, and that's what people are looking for.
Well, as that's now coming into play, this next graph from Dr. Andrew Wilson shows the significant housing affordability advantages for migrants buying in Brisbane. So the median house price in Brisbane is $530,000. I jokingly say you can't get a double garage in Sydney for that, can you?
Now, look, you're pretty right there. It's a bit crazy. It's almost half. It is under half of what Sydney is. So there's definitely affordability issues there that Brisbane can capitalise on, and if we can create that jobs growth, everyone will follow on.
Well, the next graph shows how migration has been recovering, and it did slow down. So if you go back to the beginning of this century, around 2000, lots of people were moving to Brisbane, and it kept building to a maximum of 74,000 people moving into the state in around 2008-9 after the global financial crisis, and then it started to peter off. But you can clearly see a trend again, as you said, combination of interstate migration, overseas migration, and just natural population growth, because we're all living a bit longer and making a few more babies.
Yeah, most definitely. And look, that particular period between the early 2000s and 2006 or 7, that's when Brisbane really performed its last, big, strong kind of boom, I guess you could say. when we had all those people coming to Brisbane. And since then, that just hasn't happened. But we are starting to see people come back, which is very encouraging.
Now, this next graph shows the jobless rate in Brisbane compared to the nation. And interestingly, it has now dropped, Brett, so that the unemployment rate in Brisbane at 5.1% is lower than the national average. A combination of creating more jobs and the ability of people to want to take those jobs. But the interesting thing is that hasn't translated yet to wages growth. And one of the points Andrew Wilson made was that the government's in a bit of a dilemma. In theory, having low interest rates, in theory, having low inflation, and then creating jobs, and everybody who wants a job basically having a job. 5.1% unemployment, and I know you've got an economics background, is virtually full employment. Anyone who wants a job can get it. Maybe not the job that they want, but there are jobs there, and a lot of them permanent jobs. But the dilemma for the government is wages haven't gone up, and so therefore, despite some people saying interest rates are eventually going to go up, Andrew Wilson thought they may actually go down because something has to happen. They're not going to put up rates till wages go up, are they?
No, that's right. And it's also the devil in the detail there. I think a lot of those jobs that have been created, it's an early stage where they may be part-time or casual, just before that period of time where there's more business confidence and certainty, and they can actually translate to full-time jobs. So I think it's in a transition phase there. And although it is quite low, that figure may not go down a lot more, but those jobs will be converted from part-time casual into full-time.
Now, the next graph is very interesting because it shows the breakdown between owner-occupiers and investors and first home buyers. So owner-occupiers fall into two groups really, changeover buyers, and that's the bulk of the market. We keep thinking about investment, but we've got to remember that 70% of home buyers are property buyers, purchasers, are really home buyers rather than investors, and that's good. As an investor, that underpins our market when you've got a large percentage of people who buy property with very different criteria to what you and I have in mind. So when you look at this, it's showing that what we've noticed, investor sentiment has dropped a bit, but owner-occupiers are back in the market, first home buyers are back in the market. Clearly they know something, Brett.
Yeah, look, it's interesting. We obviously made the comment halfway through last year that Brisbane home buyers were at a 10-year high. And that actually caused a bit of we call it a ripple effect in the market, because those first homeowners were allowing the upgraders to move on to their next level as well. And you can actually see a sharp rise there, Michael.
Yes.
Kind of towards the end of last year, that those changeover buyers were kind of freed up from the first home buyers and went on to the next level of property.
Now, I preempted the next slide a little bit when we talked about interest rates, because what this is showing what interest rates have been and what inflation is. And in the early 2000s, a decade ago really, what happened was that wages were going up higher than inflation, so people felt prosperous. So you can see the orange line showing that the Reserve Bank interest rates, the official rates, which is a bit lower than the rates you and I paid in the bank, was high, but that was because inflation was high, our wages were high, and we felt prosperous. But as you see us getting to the right-hand side of the graph and getting to the point where we're now paying lower interest rates, but that's also related to lower inflation, but our wages are going up much the same. So really, this is what I mentioned a short while ago, the prosperity gap isn't there. People have got jobs, but they say inflation's going up at 1.5%, 2%. Brett, I know the cost of petrol and everything else that you and I spend seems to go up much more than that. So you can see why some people are a bit disheartened.
Yeah, look, most definitely. And I kind of guess that what we came back to before a little bit as well. Business doesn't have that confidence to push to the next level and get more employees and push for pay rises and get quality people. So that's the next stage of the cycle, and we'll hopefully start to see that over the coming 12 months.
Now, in a period of low capital growth or lower capital growth, one actually has to look at the total picture of returns for an investment. So you get your returns from an investment by capital growth, by rental return, by tax benefits, such as depreciation allowance and negative gearing, and also by manufacturing capital growth. And Andrew Wilson was speaking a bit about the very strong rental yields we're currently getting in Brisbane, and you can see on this next graph here that, in fact, rental yields in Brisbane are better than in any of the other capital cities. Now, while that's important, we can't just focus on rental yields because it's a fact that at the moment there hasn't been as much capital growth, so a bit better rental yields, but that'll never get you out of the rat race. So don't get sidetracked chasing yields. They're important and cash flow keeps you in the game, but it's really capital growth that gets you out. But that's starting to happen, isn't it, Brett?
Yeah, that's right, Michael. And that's the reason that the rents have actually been growing. So although we've had the floods and the mining downturn and all the cyclones, rents have actually continued to grow reasonably strongly during that period. And it's for the reason that the rental yields are so high. It's just because capital growth hasn't started to pick up yet. But what will start to happen, and we're starting to see it now, is that yield will start to drop as property prices start to rise and the yields will get back to some normality.
Well, this last graph gives a summary of the Brisbane market outlook for 2018, and Andrew Wilson believes interest rates are going to remain on hold for the rest of the year, and I fully agree with that. There's no reason for interest rates to go up. He sees the Brisbane economy continuing to strengthen, more jobs are being created, lower jobless, and when people start to feel confident about their financial future, they're going to start making bigger spending investments, whether it'll be for their homes, for cars, for TVs, but that'll get the economy going and it's got a ripple effect. He sees a significant turnaround to migration and that's going to continue to accelerate because of lifestyle and affordability of Brisbane. The oversupply of housing is going to continue to decline, a combination of fewer new builds at the same time as a rising demand because of increased population. He believes that there's going to be fewer home buyers because they're renting at the moment, but more migrants. And there's an interesting trend in Brisbane a bit about Airbnb. That's going to tighten the rental market because home buyers are going to be getting back into renting for a little while. He also believes that Brisbane has been a bit left behind for foreign investment with regard to, well, compared to Melbourne and Sydney, but now the affordability gap is bringing more foreign investors to Queensland, and that's good for the property markets. At the same time, of course, local investors are going to return, but not every area is the right place to invest. So he interestingly came up to the same conclusions that your local research had done, that houses in the inner and middle ring suburbs, in his word, say the best value on this slide, but really we don't care as much about today's value. We're looking forward and we believe they're going to remain the sort of property that will be in strong supply in the long term. Sorry, I apologise, in strong demand in the long term.
Yes, yeah, that's right. Look, we've got to get into that inner ring where there's jobs, there's good school catchments and public transport, there's infrastructure. And that you keep getting back to the word security, Michael, and that, you secure there's good jobs, there's good demand for housing. So they're the kind of areas that are going to continue to perform well.
So the good news is Brisbane will perform a bit better in 2018 than it did the last couple of years. Interestingly, there's no doubt that the other states are not going to perform as well as they did in the last couple of years, which means that despite maybe only a prediction of 3% capital growth by Dr. Wilson overall for Brisbane, that's going to be better than Sydney and not much lower than Melbourne, and that can be you can achieve much higher returns, but with careful property selection. So when your team looks for a property that outperforms the averages to beat that, and clearly you're doing it because the track record after 10 years is there, what do you look for? How do you find those areas?
Yeah, look, it's a top-down approach, Michael. So we start with the big picture and we start where jobs are being created. That's where people want to move. They generally want to be within potentially, 20 to 30 minutes maximum of where they work. Obviously train lines are becoming more important. I think in the last decade, suburbs with the train line actually perform 40% better, would you believe? So with another 1 million cars on the road in the next 10 to 12 years, or 1 million people in Brisbane, that's going to drive that demand up as well. So public transport, school catchments, we're learning our lessons from Melbourne where there's huge demand for school catchments, and we're just starting to see that trend here as well. So people are putting their jobs and their families first with schools and employment, and everything else really second. They just want to get into that secure area and hold over the longer term.
Great. So good times ahead for Brisbane. If people want to understand how to get an investment grade property in Brisbane or buy an A-class home, because there is still quite some strong segmentation in the market. There are good properties that are doing well and secondary properties are not. How do they get in contact with you?
Look, they can contact me in the office. They can contact me from our website or on our emails. Even on Facebook, Michael, we do Facebook a fair bit. So I'm more than happy to sit down and have a coffee at any stage.
So if somebody wants to get involved in property or understand how their portfolio is currently performing, and even if they're not interested in Brisbane, if they're Brisbane based and wants to have a chat with you, because as a national company you're not only focused on Brisbane, you have access to all the big markets in Australia, let them go to metropole.com.au, and there's a link here on the website on this video right now, and it'll be interesting to catch up later in the year, Brett, and see how it's all going.
Yeah, looking forward to it. It's going to be a really positive year, so looking forward to seeing how it all pans out.
Great. Thank you, Brett.
Thanks.